In this video, I'm gonna share with you guys a very simple way to trade the Tome Demark 9-count sequential indicator. Now, one of the beautiful things about what I'm gonna share with you guys today is the fact that we can have a positive reward to risk ratio where we are aiming to make 2 times what we're willing to risk on any one trade. Now, before I share with you guys this strategy, I wanna let you know throughout this video, I'll share with you guys 2 separate resources where you can get the indicator for absolutely free. But let's talk about what the 9-count indicator is. Right here on the chart, we can see a 9 is highlighted. And what it's basically saying is each one of these candles that is counted starting at 1, 2, 3, 4, 5, 6, 7, 8, 9. That means that on candle number 1, it closed higher than the close of 4 candles back. So if we look 4 candles back, candle 1, candle 2, candle 3, candle 4. Now, if I simply just drag a horizontal line across candle number 4, we can clearly see that number 1 is actually higher than that. That's what started the count. Then from that point on, every candle has to be higher than the 4th bar back. So for the first candle to plot, we were looking at this candle right here. But now on candle number 2, it needs to close higher than 1, 2, 3, 4, which means it has to close higher than the close of this candle right here. And then it keeps going on throughout the count. Now to the downside, we start getting counts to the downside. And we see a 9 count below us. And then what that's saying is the close of this candle was lower than the close of 4 candles back. So in this case, 1, 2, 3, and then candle number 4 would be right here. And we can clearly see that this close was lower than that close. And to start off the count, we can see right here on bar number 1, what do we have? Well, 1, 2, 3, 4. Did it close lower? Did this candle right here close lower than this candle right up here? The answer is absolutely yes. Now, why is this important? Well, it's very simple. What we're looking for, or what this indicator is basically aiming to tell us, is that there is exhaustion in the market. Now, once exhaustion occurs, normally one of 2 things will occur. One, we get a pullback in the market like this, or like in this case right here, we get a 9 count and the market goes sideways. That's normally the 2 outcomes. Now, the third one would be that the market just continues to drop down lower. And that is a reality as well. No trading strategy out there is 100%, but when we can use this indicator with a positive reward to risk ratio, you guys are going to see that it could be very low stress trading with very minimum rules. All right, now before we go over all the parameters for the strategy, let's talk about how you can get the indicator. If you trade with NinjaTrader platform, there'll be a link in the description box down below. You'll sign up to my email list. I will be sending the link out to download that indicator for free on Sunday. If you're watching this video after Sunday, it should be automated. Once you go ahead, click on the link, it'll go ahead and send you an email with the indicator. Option number 2 is going to be if you use TradingView. You can see here's the same 9 count right here, 9 here, 9 down here. It's the exact same in terms of counting the price bars. However, on TradingView, you can download this indicator for free. And essentially, if you go right to indicators, type in Lux Algo Sequencer, and you'll go ahead and get the indicator downloaded for the TradingView platform. So that's the 2 free resources I do have for you. I also believe on the Thinkorswim platform, they already have the indicator built in. Now for this example, we're going to use the NinjaTrader platform since it's much easier to see the 9 counts as they are highlighted in yellow. So the first thing we need to be able to do, obviously, is go ahead and identify the 9 count. Well, there we go. We have the 9 count. The second criteria, we need to see count 1 through 9. Which candle had the highest, in this case, the highest wick. If we're looking at a downturn, we want to see which candle has the lowest low. It can be a wick or it can be a candle body. Same thing to the upside. Now, whenever we have 2 candles very close to the same price point, I want to use the measurement off the larger of the 2 candles. So in this case, if we measure this candle, we're going to see roughly we have a 19.25 point candle. So once we get the 9 count, say, okay, we got the 9 count on the opening of the next candle. Go ahead and say, all right, our stop loss is going to be 19 points, which in this case, we put our stop loss right up here near the highs. Then what we're aiming for is a 2-to-1 reward to risk ratio. So essentially 36 points on that trade. And you can see the market went way more than 36 points. It actually went 100 points. Now, one of the things I would do with this strategy is once the market has essentially went 19 points in our favor. So as this candle's coming down, once the market got to about right here, I would then grab that stop loss and move it from where it currently was and move it to break even. And then from that point on, we can continue to trail the market as it's trying to make our way down to that 2-to-1. So what I mean is every time the market moves another point in our favor, the stop loss could go one more point within profit. So it goes from break even. Then once we're up, let's say 20 points, now the stop loss is at +1. Then we go where we're up 22 points on the trade. Our stop loss would then be +2 on that trade. Now you might say, Mike, that seems a little bit complicated having to measure out each candle. Well, you know what? Here's going to be another tip that simplified this for you. Now, before I show you guys this next tip, I want to remind you guys, if you guys trade with prop firms like Apex, My Fund and Futures, or Take Profit Traders, and you want a way to support the channel at no additional cost to yourself, use the links in the description box down below. And for this, we want to come right over and grab your ATR indicator. Most platforms are going to have this. So put the ATR indicator on. Then when it says period, we're simply going to put that to a period of 1. Then I'm going to change this plot down here just to make it a little bit easier to see. I'm going to change the color of the plot as well. Now you can see we have an ATR indicator. Now this is going to make it very simple. On that candle that we measured, the 8 count indicator, we can simply see if I highlight right over here, the ATR was actually 18.75 points. So instead of grabbing the measuring tool, we can just simply look right down here. Now, another reason this is going to be very useful is by using the ATR to determine where our stop and take profit levels should be. It's actually using the current market environment. So when the volatility expands, guess what? Your stops and targets will be able to adjust. Now, when we come down here towards this low right down here, we get a 9 count. Well, we can clearly see that this candle made the lowest low. So in this case, if we look, what was the ATR on that lowest candle? We look right there is roughly 36.25 points. So one of the things that we could do is simply enter the market at the open of the next candle. And if we look, we were down roughly 25 points. So maybe we're sweating it out a little bit. But then if we go ahead and we look right there from the opening price, how high did this market go? Did the market go over 72 points? And you can see right there, it went up over 81 points. In this example, once the market got roughly right about here, your stop loss was then moved to break even. Then it continued to trail price up. Now, what I'm going to do with this is let's go ahead and actually see where the actual stop loss would have been in this example. And again, we said 36.25 points would be our stop loss. So our initial stop loss would have essentially been right down here. Now, once we got where we were 36 within profit, we would just simply take that stop loss, move it to break even. Now, if you look at the horizontal line, that would represent our stop loss. Was our stop loss ever hit before the market went 72 points in our favor? And we can clearly see the market never made it down towards that price point. However, I want to warn you, not every trade is going to be just that good. Look, for example, the very last signal that we saw out here on Friday. I'm using 30-minute charts for this example. The bigger the time frame, I found that the signal tends to work better, at least from what I've been studying in the charts. Now, in this example, if we look at where that 9 count is, obviously it's the highest candle within that 9 count. And if we look at what the ATR was on that candle, it was 14.5 points. Okay, well, if we look from the close of that candle, aka the opening of the next candle, the market went up 21 points. So you know what? We just lost on that trade. But think about that. The trade before that, we just made 72 points on that potential trade, or we had the potential to. Then on the signal right before that, keep in mind the ATR was 18. So we essentially made at least 36 points on that move down. So yes, we're going to give back some on some of the trades, and that's just the way it shakes out. Now, if we look at the signal before that, I'm also going to share with you guys 1 or 2 more ways in which we can actually enter on this trade. Now, before we get into that, I need you guys to answer this question for me. In this question, if you got the answer right, this is going to also help you become a better trader. If we're risking $1 in order to make $2, meaning a 2-to-1 reward to risk ratio, what percent of winning trades do you need to have in order to essentially break even? Let me know in the comment section down below. Now, at the end of this video, before I sign off, I'll give you what the correct answer actually is for that question. So make sure you watch to the end. All right, so now let's look at that next signal. We can see right here, we had a 9 count. Was it the lowest candle? Yes. We look right here. What was the ATR on that candle? 20.25 points. So if we look, where is the opening of the next candle? It was right down here. Simply enter the trade right there. So now if we measure essentially from the opening of that candle, we're just going to simply measure down 20 points or so. And that's going to give us somewhere right up here in the ballpark. I then drop a horizontal line. That white line is going to represent the stop loss order. Now, if you notice, did the market go in our favor by 20 points? we can see right up here, it went 26 points. So in this example, you should have made at least 6 points on this trade. I know, Mike, it's not 2-1. We didn't hit our complete target, but we were aiming for a 2-1. Now, if you did not move your stop loss, then in this case, you can see we came down. We never would have been stopped out. Then the market continued to run. And that's something you have to battle as a trader, and move your stop loss to break even and try to protect your capital? Or do you want to go ahead and let the market swing for some of the opportunities out there? Now, if we look at this 9 count right here, we can actually see this candle right here, this 7 candle is the lowest in the series of this 9 count. So if we look, what was the ATR on that 7 count indicator? We can see it was 11. So if we look right there from that 9 count and we go ahead and we go right here, did the market go up at least 11 points? It did. So in this case, worst case scenario, it would have been a break-even trade. Or, you know, if you did not take it off, you can see that it did run up over 22 points and you would have, again, had another winning trade. Well, here's a 9 count right here. And if we look at what was the low candle on the 9 count, we can see right there, it was roughly 19.25 points. So if we measure right there from the close of that 9 count indicator, right up here, we went 39 points. Another full 2-to-1 reward to risk ratio target. And again, this is going to work best on higher time frames. However, what if there's another way in which we can enter this market? And here's what I'm talking about. So I'm going to scroll this back here just a bit, just to kind of give you guys an idea of what I'm talking about. I'm going to remove the drawing objects. So when we got this 9 count indicator right here, and I got to warn you, there are going to be some downsides to using this second entry method. And that would be once you get the 9 count, in this case, if we're looking for the 9 count to be a buy signal, look and see, can the next candle go below that candle and then come back above the low of that candle? This case we did. So as soon as we started coming back above the low of that candle, we could enter down here, which in that terms would give us a better entry on that move, which means our targets could be hit a little bit sooner. We go back and look at this 9 count. Well, you know what? This 9 count did the same exact thing. Here's the 9 count. The next candle goes slightly above the high. Then we would get in right as we start coming back down below the high of that 9 count indicator. Now, in this example, that would make a difference out of our entry of about 7 points. So we could improve our entry price by about 7 points. We look right here, we have the 9 count right here. This candle right here is not a 1 count. So this candle right here goes below it, comes back above it, and look how much we could increase our entry price from. In this example, we could increase our entry price by about 19 points. That's huge. And you could still aim for the same target as if you were entering up here. That would actually extend the reward to risk ratio even better for your current position. So in this example, if we were looking to essentially make 72 points on a profitable trade, now what we could do is look, okay, all right, from our entry point down to our new entry point, we go ahead and add another 19 points of profit on that. So for that, we're going to go ahead and pull over the calculator real quick, and we go 19 plus 72. We now have the potential to make 91 points on this trade. And if you guys remember back from this example, if we measure right from there, does the market actually go up that high? You can see right up here, we're already at 88 points, and the market goes even higher from there. And again, we could be trailing our stop with that same method that we talked about earlier in this video. Now, another way that we could enter, and again, if you guys join me during the live streams, you guys see how I enter the markets. If you don't want to miss the next time I go live, make sure you subscribe, then you have the bell notifications turned on for all. But on the smaller time frame charts, if we see the 9 count playing out in this example off the 30-minute chart, we can look for buy signals. In this case, since this is a 9 count buy signal, we can look for buy signals on the smaller time frames to try to pinpoint and get that sniper entry into that trade. So now let's take a look at how one of these examples would look like being played out. And for this, I'm going to use the playback feature within NinjaTrader. Now, one thing we can note right now, we're working on bar number 9. We see 6, 7, 8. This will be bar number 9. So what was the ATR of bar number 8? Since right now it is the highest bar, would be 18.75 points. So for this, we have plenty of time if you're looking at a 30-minute chart. Now, if we come right over here and we set up the ATM strategy, we know there's 4 ticks in a point, 18.75 times 4 comes out to 75 points. And then for our take profit, we want to double that. Again, aiming for that 2-to-1 reward to risk ratio. So in this case, we have 150 tick take profit. Go ahead and select OK. Now, if indeed we do plot a 9 count at the close of this candle, then we want to go ahead and enter the market. We're going to go with entry method number 1. just to kind of keep it simple. And I want you guys to get a chance to see how this actually plays out. There we go. Right now that bar just closed. We get the 9 count. Simply just hit sell market. Our stop loss is way up here. Our take profit is down here. Now, one of the things that I'm going to do is we're just going to simply hit play. I'm going to speed this up. And this is one of the beautiful things about playback. And let's just see this trade play out. Will it stop us out? You can see the second entry. We could have just been entered in up there for a better entry. But again, I was trying to keep it very simple for this video demonstrations. Then we're going to quickly see the market runs down. Boom, hits our take profit. One simple trade, a very favorable reward to risk ratio on the higher time frames. And if you're trading with a prop firm or whatnot, you might say, Mike, I can't risk that much per trade. Keep in mind, we can always trade micros. It's going to be the same exact setup. And that's another way in which we can reduce our risk in the markets. Now, let's talk about what the answer was to that 2-to-1 reward to risk ratio. Let's double check yourself to see if indeed you actually got it right. Now, I'm going to go ahead and pull the calculator out real quick and let's just double check ourselves. I want you guys to understand how I come up with this answer. And essentially, if we were to win 34 trades out of 100, right? So out of 100 trades, we only win 34 times. That would be a 34% win-loss ratio. We would make $68. All right. So that means if we minus 34 from 100, keep in mind we won 34 trades. That means we would lose 66% of our trades. And by losing 66% of our trades, we would only lose $66. So essentially with a 34% win-loss ratio, minus commissions, not even taking into consideration commissions, you could essentially be a break-even trader with a 2-to-1 reward to risk ratio. Now, if you guys like to see which prop firm is best, Apex Trader Funding, My Funded Futures, or Take Profit Trader, make sure to watch this video right here.